Hey, well, welcome back everyone to the Wealthy Speaker Show. Is there ever a bad time to talk about money and finances? I don't think so. And you all know that I love, love, love to talk about money. So who do we bring in to talk about this? Well, it makes sense that it's a former CFO, Danielle Hayden. Welcome to the show.
Thank you so much for having me here. I'm excited to have this conversation.
Now, I can see you on Zoom, but the rest of our listeners cannot. And I suspect when you went to school to study finance, you didn't quite look like everybody else in your class. Am I wrong about that? Is that crazy?
Oh, no, yeah, you hit hit right on the nail. It's interesting. I have always been such a people person. Actually, right before I transitioned into accounting, I was working as a hairdresser,
Oh,
and yeah,
now
totally different, very
that's
creative.
interesting.
Yes, yeah, and I loved talking to people, and so as I went into school for accounting and finance, I was always the you know gabby one in the background because
All these I'm thinking a bunch of left brain dudes is what you had in your class. Is that
yeah,
right?
yeah, very interesting.
Well, okay. So talk a little bit about kind of how you came to run your business as it is today. What was your path? Because you worked in the corporate world as a CFO for a while, right?
Yeah. So I went into corporate accounting, which means I helped mid-sized businesses. About 20 to $50 million in revenue. And I went into these businesses and I helped them understand the numbers so that the board of directors, the investors, and the CEO could use those numbers to grow the business. And so I was involved with several acquisitions where I was part of a management team that would go in, put in a structure of key performance indicators and board presentations to help hold the entire management team accountable to our goals. We would go in, we would build the company, and then we would spin it off and sell it to another group of investors or private equity firm or another company. What's so cool about what I was able to do there was learning how these investors and learning how the board of directors and the CEOs use the financial information to grow the business. And
Right.
so I went on a mission to bring that to entrepreneurship. I said, how can small business, how can entrepreneurs compete with bigger businesses if they don't have that same resource? And so we're on a mission to bring everything I learned during that time as a CFO to entrepreneurship.
I love that. And let me ask you this. Somebody who, let's say, we're going to break it down and talk about kind of two groups of people. The first group is that entrepreneur who's on their way to their first 100K. That's going to be our emerging speaker group. And then we have a lot of people in our world, in our masterminds and in private coaching and in our school who are actually more like at 300 aiming for seven figures and beyond. So does all of the same um, is it all the same regardless? And we'll talk a little bit about what are some basic things to do for that person on the way to the first 100K. But you said 20 to 50 million. Is that the same ideas as somebody looking to get to the first million?
Of course it is.
Yeah.
Yes. Yeah, because how do you get to 20 to 50 million? You start with your first million, right?
Right. Yeah.
And you have to start somewhere. And that goes for the same person who's under 100K. We have so many clients. Most of our clients are within that range of their we have some clients who are just hitting their $100,000 range and
Yeah.
clients who are on their way to their first $5 million a year. The core concepts are the same, and it's learning to make data driven decisions so that you can continue to grow your business no matter where you're at.
I love that. I just did a spreadsheet talking about what are were going to be my paths to the seven figures. You know, COVID was a little bit of a delay, but I do believe that our company will get there either next year or the year after, and really put down what was going to be the investment required in order, with all the different initiatives that I had in mind. So this is really good timing for me. So
Good, perfect, awesome.
I'm really excited to talk to you, and I may just like use this all for my own personal knowledge.
There you go.
Okay, so let's say somebody's looking to go to that first 100K. Let's give them one or two strategies that will just be for them. I know that these will flow into, these will be the same strategies that the people hoping to earn more will need. But what are some of the basics?
Yep. If we're just getting started, or you've been started, but you're slow to grow in the first few years, some very, very basics. Make sure you separate your business expenses completely from your personal.
Yes,
You want two separate checking accounts, credit cards. You do not want any commingling whatsoever.
right,
Really important in the eyes of the IRS. We won't go into all the reasons why, but
right.
just do it.
No co-mingling. I liked your
Yeah.
term there.
Yeah, no commingling. Then from
Right.
there, I want you to get into an accounting software. We have people who tell me all the time, I don't have enough. I don't have enough expenses. I don't have enough income. Why don't you have enough? You have enough. When you are starting from the beginning, it is the best time
Yes.
to start getting things in the system, start creating good habits. That way you already have those things in place as you grow.
An Excel spreadsheet is not going to cut it at some point in time, and no better time to do it now. So QuickBooks, whatever it might be, just do it.
Yeah, and you
Right.
lose your history. So I always hate to hear that business owners were like, "Well, I had it in Excel." I said, "But you don't have it in Excel now."
Mhm.
So when we're 4 years in, and yeah, maybe you have an accounting system, starting year 3, you lost the first 3 years of data, and there's
Mhm. And you
nothing
gotta
more
know.
fun than watching that
Yeah.
growth.
Yeah. And I love, part of my coach that I go to, Dan Sullivan's group, strategic coach, they talk about 10 timesing your business. And when I first heard that term, I was like, oh man, that sounds like so overwhelming. I'm going to have to work so hard. And then I actually, based on my numbers, went back and realized I'd already done it once. So of course I can do it again. So that was really exciting to be able to track, because I went into QuickBooks like the minute I got into business. So, okay, that's really good. No commingling, software. What else?
Once you're in the software, it's time to start recording it. So make sure that you have your chart of accounts set up correctly. You have a profit and loss statement that's set up correctly. Start recording your transactions, and from day one, I want you to start reviewing the information. So start pulling the profit and loss statement. Pulling the balance sheet. You're going to struggle with this. You're going to say, I don't know what the hell this means. That's okay. I want you to start reading the information, because I promise you, your numbers are trying to tell you a story. You have to read the story. And so from day one, if you can look at it and say, oh, wow, I spent a lot of money right there. Did that work for me?
Mhm.
Let me do more of what's working and less of what's not.
Okay. And how often should you run your P&L and be reviewing it?
I would prefer for it to be monthly. However, I know that that's pretty daunting. So, you could do this quarterly. So we have some clients who get their financial statements monthly. We have some who do it quarterly, but at a minimum, you need to do it quarterly, because that is going to set you up for the rest of the year. Do I have enough in tax savings? Am
Yeah.
I bringing in enough to support my goals? How do I react so that you have enough time throughout the year to react? If you wait until November to get your bookkeeping caught up, you can't make any decisions anymore. The year's done.
Right. You're too late to the ball.
Yeah.
And uh, by doing it that frequently, another good habit to get into is taking a certain percentage aside of every check that comes in. Can that be a habit that you could start doing right from the get-go, so
Of
that
course.
you're prepared for taxes and things like that? I cannot tell you how many times my husband and I both have owed 20, 30, 40,
Yeah.
$50,000. And it makes so much more sense to be paying it as you go.
Yeah, at least set it aside. I suggest to all of our clients open up a checking account or savings account where you can transfer the funds. You can do it based on every check that you get. When you review your financial statements, you'll have what's called the net income or loss.
Hmm.
If you have a loss, you don't have to set anything aside for taxes because you're going to be claiming a loss. It is what it is. If you have a profit, then you need to be setting aside between 20 to 30% of your profit. You can do it based on the check amount, but you might have
Yeah.
oversaved throughout the year, and that's not a bad thing. So a lot of people say to me, "Well, I'd rather be oversaved than undersaved," and I say, "Yeah, but
Mhm.
if you're oversaved, then you're not taking that cash and reinvesting it
That,
or getting yourself paid. So I'd rather you just use the funds correctly in the first place."
okay. All right. So we don't want to, you have a saying, ignoring your numbers is not a strategy. And I would say that that might be our pull quote for the beginning of the, every time we do our show notes and our emailer to promote this, we always have a pull quote. And I think that might be, we
That's it.
landed on that very early on. Ignoring your numbers is not a strategy, from Danielle. Okay, let's talk about the 3 R's.
Yes. So we talked about earlier, can the $50 million business use the same thing as the $100,000 business? And this is where we can go back to fundamentals. The 3 R's: record, review, and read. Every single person needs to do that. So either as a business owner, you're doing your own bookkeeping, or or you've gotten help and you've outsourced this. Um, You'll record the transactions in your accounting software. So if you're DIY style, you'll be the one going in and recording those. If you have help, your bookkeeper should be recording those for you. You want to review everything. So that was that process that we were talking about with the profit and loss statement and the balance sheet. It's taking that time. I think we overused the term CEO time in 2020, but there's something to be said for it. And what that means is I'm not going to work in my business today. I'm going to work on my business. And so
Yes.
today I'm going to come in with my CEO hat, and I am going to have the numbers already complete. Now my bookkeeper sent me the numbers. I'm not in the nitty-gritty. I'm able to approach it like an outsider and really review everything. And then the last part is read, right? So your numbers are trying to tell you the story. Your job is to read the story. So you need to read that and figure out what is working. Where am I spending too much money? Where am I not spending enough money? Where do I need to reinvest? If I have a large amount of profit, but I don't have a business coach, then maybe I need to start investing into my business, investing in my self development. Maybe this year I've invested too much in my self development and I'm taking a loss home in my business. Or that's just one example. Anywhere where you're spending money or earning money, reading what's working and not working.
I love it. I love it. I remember one year thinking, oh, I don't know if I'm going to continue on with my mastermind. And when I looked back at the end of the year, I recognized that actually it was one of my most profitable centers. And why would I do away with that? You know, I enjoyed it. I don't know why I had come up with that idea in the first place, but once I really reviewed the numbers, boy, what a story it did tell me. And I recognized that that would be foolish to not really appreciate what that was bringing to the table for me.
Well, that's a great example of that. We see that a lot, and I like that you brought up profitability because that's really what's most important, guys.
Mm.
You know, if you we had a client last year who she launched a new service offering, and she was so excited about it. She felt like it was her life's mission to bring this to the world. She really felt like there was nobody else out there taking all of the pieces of writing a book and publishing it and putting it into one offering, right? So she started this company or started this new service line, and she had to have all these contractors that she had to work with in order to get the deliverable done. So although she had I want to say, I mean, she had quadrupled her revenue, but she was spending so much money in paying the contractors because the contractors were giving her a low quote and then going over in time.
Ah,
Uh, it broke my heart. And then she had clients where she had billing, but then had some collections issues. So she was billing and then giving them 30 days. They were paying it 60 days, but she had contractors who were doing work for her that she had to pay within 14 days. Recipe for disaster.
Yeah.
However, she was so happy in doing it, right? But she was getting the numbers in front of her every month. She was watching her credit cards increase, watching her availability decrease, watching her cash dwindle. And she said, although I love this and I want to bring this to the world, it is not profitable. I
Yeah.
have to go back to my coaching business where I was making pure profit
Mm.
because that is where I'm making money. I'm going to bankrupt not only myself, but my family if I keep on going this. So that's where reading those numbers, you can make quick decisions. I think she launched it in January and closed it in August. And that's how quickly you can make decisions if you're monitoring your numbers. Imagine if she would have went through December.
She could have, if she wasn't watching the numbers, she could have dragged it on for a couple of years and not, in the end of that, had it be profitable at all. So that was a very good decision made very quickly. Love that. Okay. Transitioning over to the people now, and these things will apply to everybody anyway, really. But let's talk about, all right, your goal is 7 figures. And hey, let's face it, everybody had a rough 2020. We know that. We felt very, very, I don't even know what the word is. It's beyond gratitude. It's something more that we ended up finishing up from the year before in a really, really, really rough year. There's some pride in there. I'm humbled by it. There's gratitude for it. It's just incredible. And, but we're not anywhere near where we wanted to be, of course, this
Of
year,
course.
which
Yeah.
nobody was. And so, there were some unicorns in my business, though. I was very proud of some of my clients who were still having their best year ever, which is awesome. So let's fast forward to some of the more critical things to scaling your speaking business. What would some of those be?
As you start to scale, I'm going to assume we already have the good bookkeeping practices. We're reviewing numbers on a regular basis, or at least you have the information.
Right.
Next up is planning.
Mhm.
In corporate, we went through a giant budget process. Okay, I would go to each department and I'd say, "All right, advertising, what's our plan? All
Mm.
right, sales guys, tell me what your goals are, right? What do you need? Who do we need to hire? What do we need in order to be able to support those goals? All right, R&D, research and development, and in a small business, right? That's just you. What do we plan on doing this year? What do we plan on developing? Are we doing a new course? Are we doing a new coaching program? Okay. All right. Where are we investing our money this year? What development are we doing? Right. So I went to each of these departments and we pulled all of this information into an annual budget. I know that feels really big as a business owner, but during that CEO day, right? So I'm not working in my business today, I'm working on my business. I want you to have a planning session. I want you to pull your income statement for the last, usually we do 12 months, but with 2020, we're doing the last 2 years. We're pulling,
Okay.
right?
A little bit more that's accurate.
Yeah, let's give a runway here. So we do this exercise with clients where we'll pull all of 2019, all of 2020 data, and we'll look at the trends, and then we'll say, all right, let's start from the top. What are our revenue goals? What do we have any big, large speaking engagements? What do we already have planned, and what are our goals? So we start from the top. What's next? Let's plan our spending. Do we need to advertise? Do we need to travel? Do we what do we need to help hit those revenue goals?
What are our big giant investments going to be throughout the year?
What are our investments?
And I set aside, and this is where you're helping me get more clear. Could it be 10,000, 15, 20, $25,000 this year just for personal development for my
Yeah.
coaches? So I've never really down and created the budget for those things throughout the year. I think I'm like a lot of people where I'm really excited to set the financial goal for revenue, but
But you're not planning the
that's where the
expenses.
budgeting
Yeah,
stops.
yeah, I know. No, we hear it all the time. The people are like, well, I have a revenue goal. I'm like,
Yeah.
yeah, great. But did you decide how much you needed to invest in order to hit that revenue goal?
Yes.
You have to spend money in your business. You might have operations subscriptions, right? You need Calendly and Zoom, Acuity. Um,
Yeah.
maybe you have some contractors who are working with you, social media consultants, anybody that you have supporting you in your business, employees, contractors, other vendors who are supporting you. Maybe you're doing something in your business that you don't want to do anymore, so you plan on outsourcing it or hiring a VA or planning on, okay, where do I feel overwhelmed? I heard somebody else speaking about this recently, where I also budget my energy, right? So
Ooh.
I actually
Ooh, now
don't.
we're getting into it. This is interesting.
Yeah. So okay. So taking an inventory of what am I doing this week or this month, right? What did I do this year that I really enjoyed doing? And what did I not enjoy doing, right? So
Mm,
we hear from people all the time. I I can do my own bookkeeping. I know how to do it. I just don't want to do it. It like sucks the life out of me and it's
yeah.
this lingering black cloud, right? So maybe it's time to outsource that. Or maybe it's making website updates, right? Or it's your social media. Maybe it's the administrative tasks, right? Just doing the background planning and booking travel and keeping your calendar.
Yeah.
Maybe it's the emails suck, right? And you want your VA to come in and help you organize your emails. Whatever it is, just taking an inventory stack and then an assessment of what you enjoy and you don't enjoy, then you can plan your expenses and say, all right, if I start to hit these revenue goals, I can take more of my time speaking and planning for speaking, right? And really just honing in that skill set. And I can plan my expenses and get some of the stuff that sucks my energy and outsource it.
That's beautiful. I'll put in a plug for my new book, Scaling Your Speaking Business 10 Strategies for Earning More While Doing Less. We talk a lot about team in the book and what pieces you might be able to outsource. I love the term budget. What do you call that? The energy budget. Is that the right
Yeah,
terminology?
energy budget, energy assessment, right? Like
Oh,
just
good.
taking stack of your energy and what fills you up and what drains you.
Exactly. And okay, so I have a kind of a big picture question. In terms of the revenue expenses ratio, do you have a percentage of a goal that you and your clients are after?
Yeah, so I want you to be at 30% profitability
I was close.
after you pay yourself. So I want you to be at 30%. I think that's a very healthy business.
30% after you pay yourself.
Yes.
Okay, that's a good number to go for. You pay yourself. And so if you,
And
okay.
budget that, right? So when you do your budget exercise,
Yes.
if you are an LLC, when you actually pay yourself, you will be an owner's draw, and so you won't actually be on the income statement, but you still want to see it in the same place so that you can make sure that you're profitable by 30% after you pay yourself. If you're an S corp and you're an officer salary, then your salary will show up on the income statement. And I'm getting a little accounting terms there, but I do want to make sure that I'm, you know, addressing that kind of elephant in the room and how on how you pay yourself. But make sure you're at 30% after you pay yourself as an owner.
Okay, love that. And is there a threshold where I'm in Canada, so I'm a little bit different? I incorporated my company a few years back because I was seeing my income rise and I wanted to be able to do what you were talking about. Um, is there a threshold of a dollar amount that you say, okay, at this point, you should really be thinking about changing from a sole proprietorship to uh,
Yeah,
corporation?
unfortunately, it's a little bit of a more gray area there because it depends on how much money you're spending, you know? If you're a big spender, I can't say at $100,000 you should switch over
Right.
because you could be somebody who's running a very lean business all online,
Okay.
and without any help.
Right.
So in that instance, you might be paying yourself a lot, but
Mm.
as you scale, you probably aren't going to be able to withstand that. So I do tell people once you're paying yourself on a regular basis, so you're
Mhm.
taking regular draws from your business, it's usually a good time to start assessing it. Talk to your tax accountant, review your numbers,
Yes.
put forth this plan. If you do this planning session and and you're not planning on paying yourself very much because you're investing a lot of money this
Right.
year back into the business and back into yourself, then it's probably not a good idea to do that this year.
Okay, gotcha. And I think that your best words of advice were to talk to your tax accountant. That's really who helped me make the decision. Like, okay, I see where you're going. I see where you've been, a few years ago. This is the right time to start. Okay, fair enough. Um, let's talk about analyzing. I really love this question. Let's talk about analyzing the financial impact of a speaking engagement. Like we're really drilling down here. So you have two engagements side by side, one for ABC Corp, one for ABC Association, and we're trying to look at which one was more profitable.
Yeah. So I think it's um let's talk maybe pre-COVID, after COVID, right? Because there was a time that travel was much more of an impact. I think for
Yeah, let's talk about this during normal times.
yeah, because right now it might be you might be able to do both, right? Because you're probably not traveling, and it's going to be whatever your speaker fee is,
Right.
less any of your time to prepare for the speech, right?
Right.
Um, but pre-COVID, to measure, there's two things: measure profitability and then success. So, what is our fee and what is our revenue that we're getting from that speaking engagement,
Right.
minus any time that we needed to prepare for that engagement? So, how much time do we prepare on that speech? Um, we have some clients who are all over the board in this. We have some clients who are speakers who have their speech, right? They give it every single time that they go for a speaking engagement, and they have it really dialed in.
Mm.
Um, and that's more profitable because uh,
There's not 10 hours of prep on
you
every
don't,
single
yeah,
presentation. Yeah.
yeah.
Maybe
And
there's
we
a couple because they're customizing it a little bit
Yeah,
or something
of
like that.
course,
Yeah.
of course. Maybe changing a story
Yeah.
or changing a piece of it. And then we have other clients who they change their speech for every single
Mhm.
engagement, right? They have to pay their VA to help them with imaging and maybe even branding
PowerPoint.
issues.
Yes.
Yep,
Yes.
PowerPoints, branding, preparing for the speech. And I want you to start tracking that time. I don't care if
Uh,
it's in a Google Doc or in something more official like a Toggle software, but start tracking the amount of time that you need to prepare for each speech, because that's going to determine how profitable you are and then how much you're paying other people to support you in
how
being able to deliver.
how does one decide what to equate their own hourly to? Like I bill out at over $1,000 an hour. So am I putting it that way?
I would do how much you're paying yourself. Like if you're on a salary,
Mhm.
divide your salary by 2,080 hours.
Okay.
Um, it would be the most standard way of doing it.
Okay.
Or if you're not paying yourself right now, you can just it's different depending on where you live. You can do a quick Google search and say reasonable salary for a speaker. I'm in Ohio, in Ohio, and get a reasonable salary, and then that becomes your hourly rate.
Okay. I
Okay.
feel like that's going to be a hard Google, but anyway.
Yeah.
I don't know. Maybe it'll come up. I don't know. Okay, fair enough. So understanding that. Now, you talked earlier about KPIs, key performance indicators. What would be some KPIs for a speaker?
So it depends. what's important to you and where you're at in your journey. So in the beginning, you might be thinking more about branding exercises, right? So you're starting to get your name out there. You might be taking more engagements um, to start to build your social media. Maybe you're taking these engagements because you want to start to build your email list.
Mhm.
So at the beginning, you might just want to start by tracking, and this could be important for anybody who's seasoned as well, right? Some
Mhm.
numbers for speaking would be leads, additional leads, vendor relationships. So maybe I do a speaking engagement. I have no new followers, or I'm not allowed to get any new email subscribers. However, I met two new key partners that I can use to build relationships with in the future.
Okay. Gotcha.
So new vendor relationships, new partnerships, um, number of email subscribers, number of social media followers.
So sometimes I think maybe all we're tracking is spin-off, how
Mhm.
many speaking engagements came from that one engagement, where we could really be looking at social reach. Did it expand? Were there new partnerships? I feel like you've given us a few other things to maybe factor in to see whether or not a speaking engagement was indeed successful.
Yeah,
That's really
absolutely.
great. I love it. Well, we're really trying to think more strategically here. So the final question is really around using the financials to make strategic investments. I feel like a lot of us, and Meredith Elliott Powell put it beautifully when she wrote the foreword for Scaling Your Speaking Business. She talked about when you are growing your business, you're basically just reinvesting. Scaling means that those expenses stay kind of at one place, and then your income grows. So you're making so much more. That's what scaling is all about. What's your definition of scaling, Danielle?
Oh, I like that. I don't know that your expenses necessarily stay the same, but I think that you're
I was
able.
thinking more like they taper off. They're just not quite so they're not quite such a large chunk. Let's say we could get it to that 30% that you mentioned. It might be years 1 and 2. It's more like 60%, whereas we're getting it underhand,
Yeah,
kind
I
of
mean,
in the
think
face of
about at the beginning of your business, you're investing in building a brand. You
it.
right, you might have website development. Your expenses are going to be higher and your revenue is going to be lower. I want you to think about. We're doing a really fun exercise with our clients right now that's called the percentage of gross sales. So, looking at each of your expense lines as a percentage of your gross sales.
Ooh.
And as you scale, what I want you to see is more of that percent of sales going to officer salary, right?
Mm.
So, you are becoming more efficient with the way you do things. You have processes and systems in place that help you become scalable, right?
Mhm.
um, and then you're able to spend less money because you have such great efficiency in the things that you do, and you really honed in on that on those things. And then you're able to take more of that percentage of your sales to pay you personally, and maybe supporting some of that personal growth.
Beautiful. Well, that was a good definition. Well, you have a profit planner book series. How talk about those books and how people get them.
Yeah. The book series, there's two books right now. There's foundations and then financials. They are designed to be structured around a single quarter per book. Foundations is for somebody who we talked about earlier at the beginning of their business, or maybe you don't have any of the bookkeeping processes in place. Finances and accounting feels very overwhelming for you. I'm a big runner, and so I always use this example. You don't go say, I'm going to run a marathon and go do it next week, right?
Right.
You say, I'm going to run this marathon, and I might tomorrow I'm going to go for a walk, and then eventually I'm going to jog, and then I'm going to run the marathon. Same concept here. You don't go say, I'm going to get all my bookkeeping in order tomorrow and then just go do it.
Right.
This book every week gives you a small goal, and every day has one action task, and everything builds upon each other. So at the end of the book, you feel really confident
Mhm.
about knowing your numbers, knowing your finances, and then how to use them. Like I said, small daily tasks, note section, so you could do it right in the book, really becomes your diary. Or we do have an ebook now too. So then you would need your own pen and paper. But
Or an iPad with the stylus, which I've gone away from all books and I just write in using my pen on the iPad. It is the most brilliant thing ever.
I'll have to
So
look into
I'm
that.
I'm going to buy one of those. Your books. Where do people go to get them? Profitplannerbooks.com, perhaps.
Yep, profitplannerbooks.com. You nailed it. Yeah, yeah,
I
absolutely.
just noticed that in my notes. Duh. Okay, I think it's there. Okay, so profitplannerbooks.com. We're going to put that in the show notes. But also, if somebody's interested in kind of getting their act together financially, you also have a discovery call. Where should they go to see more about that?
Yeah, you could, same website. You can go to profitplannerbooks.com and learn more about our services as well as the books. You could book a call directly with me. You won't get a high pressure salesperson calling you off the hook. We'll have a really nice call and a chat about where you're at. It's an opportunity to ask questions. I know that money and finances and accounting can be really scary, right? We come in with a lot of baggage in this area. And so I want this to be a place where you can come and it not be scary. You can ask any of those questions that you're like, oh, I feel really stupid asking that question, because
Mm,
we have a policy at our firm. No judgment. There is no judgment.
that's beautiful.
Yeah. So come schedule a call, come talk to me. I'd love to hear more about your business and your processes. And
And it sounds like you are working with some people from our world, which I think is very, very helpful. Danielle Hayden, thank you so much for dropping by the Wealthy Speaker Show today.
thank you for having me. This was super fun.
I really appreciate it. And if for those of you listening in, hey, let us know if you've enjoyed what we've been doing today. And with that, we will say, see you soon, Wealthy Speakers. Bye for now, everybody.